Good morning, everyone. My name is Faisal Suding Farok from Komputerisasi Accounting 2B, State Politeknik of Semarang. Here is my presentation. In this opportunity, I would like to explain to you about tax accounting. So, in this presentation, I will explain to you about the tax accounting, and I will divide it into 5 sections. The first one is overview of tax accounting. The second one is about basic principles of tax accounting. The third one is about book tax gap and trade-off tax accounting. The fourth one is case study of tax accounting. And the last is the conclusion. Section 1. Overview of tax accounting. I will start from introduction of tax accounting. What is tax accounting? Basically, tax accounting is the subsector of accounting that deals with the preparation of tax returns and tax payments. But who uses tax accounting? Tax accounting is used by individuals, businesses, corporations, and other entities. So, how tax accounting is used? Tax accounting for individual focuses on income, qualifying deduction, donation, and any investment gains or losses. For the business, tax accounting is more complex, with greater scrutiny regarding how funds are spent and what is or isn't taxable. Well, next about some of the terminology in tax accounting. Accounting profit is net profit or loss for one period before deducting the tax expenses. Taxable profit or loss is profit or loss for a period calculated based on taxation regulation and the basis for calculating income tax. VAT and LST, value added taxes and luxury sales tax, is for delivery of taxable goods or services, disclosed in statement of financial position as tax payables or prepaid tax, but does not affect in the income statement. EBT, earning before taxes, is operating income or profit before tax. Income tax is tax calculated based on tax regulation, and this tax is levied on company taxable income, disclosed in the income statement so that it affects in the amount of tax burden as well as in statement of financial position such as income tax expense, income tax payable, prepaid income tax. EAT, earning after taxes, is income after tax. Section 2. Basic Principles of Tax Accounting. Okay, I will show you the flowchart of the tax accounting cycle. Starting from the usual accounting cycle, from recording to journal entries, posting to ledger, preparing a trial balance, making adjusting entries, and making financial reports. But what is emphasized here is the aspect of taxation in financial statement with fiscal reconciliation. Overall company tax will be calculated at the end of the year. Income tax is calculated from taxable income multiplied by the applicable tax rate. Taxable income is calculated from earning before taxes and then corrected or reconciled. Fiscal correction and reconciliation are needed because there are different roles between accounting and taxes in measuring income and expenses. That's why tax accounting is also important. Section 3. Book tax gap and trade-off tax accounting. Well, in this slide is about different framework of tax accounting. Accounting and taxes are determined by different authorities and with different objectives. Differences in accounting and tax are often called book tax gap. The different types are based on its nature and based on time period. Based on its nature is positive and negative. Positive is to increase taxable income. Negative is reducing taxable income. based on time period are temporary and permanent. Temporary is a result of different time recognition, but will result in a similar end result. Permanent is a difference that will be not forgotten over time, namely book stack gap. Alright, in this slide we will discuss the trade of tax accounting. With the high profit generated by the company, there are two effects. On the accounting side is profitable because it will attract potential shareholders, and large pre-tax profits will also cause large reported profits. But on the tax side is unprofitable because it increases the tax expense that must be paid. This is the trade of tax accounting. Section 4. Case study of tax accounting. In this last session, explain about taxes in accounting. In the asset group, there are several tax accounts, including prepaid tax, prepaid VAT, VAT in, and restitution tax receivable. In the liabilities group, there are income tax payable, VAT owed, and VAT payable. In the expenses group, there are income tax expense, stamp duty, and other tax expenses. In the cash flow statement, the operating activities will appear as a cash outflow, namely payment to taxes. Alright, next is case study that will give a description of accounting and tax differences. In the example, Star Incorporation bought a machine for 10,000. The machine, according to accounting, is depreciated 5 years with no residual value. For tax purpose, machine including Group 1 and depreciate 4 years. Suppose the entity income is 7,000 and operating expense is 2,000. Let's see the solution in the next slide. Well, the first is solution based on accounting. To calculate the depreciation with straight line method, the cost of the machine is 10,000 divided by economic age 5 years. So the annual depreciation is 2,000. According to the example, income is 7,000 will be reduced by total expense 4,000. Then EBT is 3,000. Income tax expense assume 25% of EBT to be 750. So that EBT 3,000 reduced by income tax expense 250, then EAT earning after taxes 2,250. Alright, next is tax-based solution. The difference is in calculation of depreciation expense because the tax rule of machine are included in category 1, so that economic age is assumed to be 4 years, different from accounting rules. So the annual depreciation is 2,500. In addition, differences also exist in tax calculation. If in accounting, tax is calculated from net income, in the financial statement of taxation, tax is calculated from taxable income. According to the example, income tax expense assume 25% of taxable income to 60-25. Section 5. Conclusion. Well, in the last session is the conclusion, and the conclusion for my presentation about tax accounting are: first, tax accounting is the subsector of accounting that deals with the preparation of tax returns and tax payment. Second, tax in accounting is generally contained in operational financial transaction and financial reporting. Third, basically, there are differences between accounting and taxation regulation. Last, as a result, pre-tax financial income and fiscal profit or taxable income also make a difference. That's all my presentation about tax accounting. I hope it will be useful for you and you can understand more about tax accounting. Thank you for your attention and good morning.